Good afternoon, I'm H. Relays. I am happy to be here with Adam Agron of Brownstein, one of the leading private equity practitioners in Denver and in Colorado. Thank you for agreeing to moderate one of the panels at the Colorado Bar Association's Private Equity Conference on January 21. Adam, you are really helming a panel that's speaking about broad trends nationally to the extent that they exist in Colorado as well. What's going on out there? Is private equity back? What are some of the deal trends that you see?
I think private equity is definitely back. There's a significant bifurcation in the market. There's certainly a sense of haves and have-nots. The companies that are performing well and have weathered the recession well are seeing deals get done. They're seeing healthy valuations. They're seeing lots of interest, and they seem to have the private equity and strategic buyers have the ability to finance them. On the other hand, companies that are not doing well, there's sort of no middle class. There's the companies that are not performing well are having a hard time attracting interest, having a hard time getting sold, getting the valuations that they like. So I think at the top of the market, things are going really well. Capital is available, deals are getting done, but outside of there, that sector, it's difficult still.
Well, a tale of two cities, Dickensian picture you've drawn for us. So what are some of the sectors that are working?
I think the sectors that are working that we've seen are fairly traditional companies, manufacturing, distribution, old line sort of businesses, services, engineering. We're not seeing a lot of deals get done in tech, although I think there's a small number of deals in certain sectors of tech, subsectors of tech that are getting done. Real estate is still struggling, as everyone knows. There's a lot of distressed action on real estate. But it's fairly broad. I mean, there's really not one sector that I can point to that's doing terribly well or terribly not well, other than real estate. So
deals are getting done. Are they getting done more on buyer terms or seller terms? There's been a big divide for a couple of years.
Yeah, again, it comes back to this bifurcation of haves and have-nots, where I think on the good companies, the strong companies that are seeing interest and where you're seeing deals close. There's been a shift back towards sellers a little bit because there's a lot of money available, there's a lot of interest, people want to get back into the game, and so those deals have, there's so much interest that I think some of the leverage has shifted back to sellers. But outside of that small sector of the market, it's clearly a buyer's market.
So multiples in that small have sector are back to pre-2008, fall 2008 levels,
yeah.
2007?
I think they are. They're described as frothy. They're very healthy. We've seen some great multiples if you're a seller, if you're a company that's performed well in the last 3 or 4 years.
How are the funds themselves doing? Are they raising new funds? Is it easy? Is it difficult? How are some of the terms changing? Well,
it remains to be seen. I think there's been almost no fundraising the last couple of years. We're now at a point where the 2004, 5, and 6 vintage funds are about to go back to market, and we'll see. People are anxious. One of our private equity clients who put a lot of money to work, and I know that they're out kind of conditioning the market to see what kind of interest they're going to get. They've seen good interest. They've performed well. They've made some good investments in that period of time. So I think we're right at the forefront of finding out how easy or not funds can raise money.
Well, we have beautiful Denver, Colorado behind us. Is the industry here large enough for there to be discernible trends or not, or is it sort of wrapped up in the national trends?
I think it's the latter. I think it's wrapped up in the national trends. We don't have that big of a market, as you know, a private equity market. There's some very strong players here, and they operate on a national level, and they don't focus just on Colorado by any means. So I don't think our market's significant enough to separate it from what's happening nationally.
So whether it's a healthy deal in a strong sector or a distressed deal in maybe real estate or some other sector, how are they being structured? What's the capital structure? A lot of debt, less debt than we saw in 2007 before?
Absolutely less debt, but it's back again on the have-not side of the equation. There's healthy amounts of debt available. Certainly not to the levels we saw, but it's trending in the right direction. I don't know that we'll ever get back to those days, but there's enough available, and frankly the terms are very attractive in terms of what the cost of that money is attractive for a healthy company.
How about the regulatory climate, the carried interest legislation, other regulatory issues out there? How is that affecting growth in private equity?
Well, we thought that 2010 we'd see a lot of activity towards the end of the year with the expectation that capital gains rates will go up next year. It's looking like that's not going to happen in terms of the capital gains rates going up next year. It hasn't been decided yet, but it's looking like it won't happen. And I think that most of that activity didn't materialize. Not because there was an expectation that it wouldn't go up next year, but I think that people were more focused on prices than they were on taxes. And while there was a lot of activity early and mid-year towards selling to take advantage of what is perceived as maybe a low capital gains rate, the lowest that we're going to see for some time, I think that gave way to pricing, and people felt like if they could get the price that they wanted to get, that would be why they would sell, and rather than sort of where they perceive capital gains rates going.
So as it should be, it's driven by the underlying economics instead of tax rates.
I think that's right.
All right, so last question, 2011. When we look back at 2011, is it going to be 2007, frothy? Is it going to be 2008, transition from okay to free fall? Is it going to be 2009, which is sort of a little bit nauseating in terms of uncertainty? What is 2011 going to hold for us?
I think it'll be like 2010, but hopefully a sort of an uptick. I don't think we're going to see a race back into the market like we saw in the 6 and 7 years. But I think we're going to see more activity. I think it's going to be broader, more deal flow. I think generally speaking it's going to be a better year than 2010, but I don't think it's going to be at the levels that everybody would like to see them at yet.
Okay, fair enough. Adam Agron, Brownstein, thank you for joining us this afternoon at the end of the Private Equity Conference on January 21. Thank you.